Good morning, good afternoon, good evening, everyone who is listening to this video presentation. Welcome to my exposition for PhD Educational Management 604. Okay, at this point, we will now be considering internal sources of finance. So what are these? Retained profits, tighter credit control, reduced inventories level, and delayed payment to trade payables. So the first one, okay, retained earnings. So what are retained earnings? Retained earnings are earnings retained within the business. So rather than distributed to shareholders in the form of dividends. So here we have, when you remove all payments from your suppliers, from your lenders, and from the government, okay, what you have is earnings or net profit. Okay, for the net profit, okay, the owner of the company or its board of directors will decide how much will be kept by the company and how much will be given back to its investors. Okay, so the ones that are given back to its investors is called dividends, and the ones that are retained within the business is called your retained earnings. So retained earnings, how do you get financing? Of course, if you earn higher in your operate all other activities, so operating, the more you earn and the greater you retain, okay, then what? There is more sources of financing for you. Why do you need retained earnings? Okay, why do you need retained earnings? You need retained earnings, or you retain earnings. You don't give it back to your investors or your clients because you need to do something that will increase your cash flow. You need to buy more equipment. You need to do research and development. You need to acquire more assets, more properties, so that your business will operate much better and increase more. Okay, so retained earnings. Now, what are the advantages of this to the business? It incurs no cost to the business. No service charge from the bank. If utangs before the loan is released to you, interests are already subtracted. So you don't really get the entire principal when you utang. When you issue share capital, there is a cost to you, because when there is a process to it. You just don't issue share capital. You have to seek the approval of the Securities and Exchange Commission. You have to do a lot of lawyer work. You have costs incurred to the business. But as to retained earnings, because your business earned this for you, it is already there. The cost or the amount of money is already sure. It's there. You know how much you get. Okay. Now, if ever that you want to give back to your investors, and then usually this dividends is less than 50% of the earnings. It is not more. So there is always retained earnings. Okay? Unless na nag-zero or nag-negative yung business mo, okay, you are running on the red, so there is always something left for the business to improve. Warren Buffett actually espouses, so it has to retain earnings and even not give back to its investors. Now, what is the pecking order? If you need money or you need to raise money for you to improve your business or to make your business better, whether you need to do research and development, maybe you need to buy more equipment or new equipment or upgrade to a better equipment, or you need to acquire more assets like land or buildings. How? What are, as a finance manager, what are your choices? This is the accepted order of things. So first, you will have to use your retained earnings. Okay, you will have to go back to your retained earnings. In the individual sense, you cash flow it. So you have this money, you use it for that. Okay, if it is kulang, then you go for a loan. The interest payments to the loan can be subtracted, and it is an advantage to your taxation. Because if you are doing well as a company, then many financial institutions will want to give a loan to you And since many are competing for you to loan from them, there may be lower rates, longer periods of time, or even higher principal that they can lend to you if you're doing well as a company. Now, if that is also still not sufficient, what else do you need? So you need to issue more shares. This is the last option for you. Now, in all this, whatever you do for the business, as the financial manager, you have to act in the best interest of the existing shareholders. As the financial manager, it is not your job to think about how the company will best profit. Yes, it is okay for you to profit as much as you can because after all, you need retained earnings. But this is not your primary job. Your primary job is for you to act on the best interest of the existing shareholders. Think of ways so that you can increase your retained earnings. And then from there, you can use that to expand and improve your business. If you expand your business, your shares, the value of the shares of the business will increase. And then, of course, that will make your shareholders wealthier, okay, richer. Okay, and that can be a source of income for them should they sell their shares. Now, that is for the long term, for internal. What can be immediately done? What can be immediately done to increase your cash flow? This is for you to ensure tighter credit control. Maybe you can just limit as a company, you can charge only up to, let's say, 10,000. Okay? So you just set a credit limit. Hanggang dito lang tayo pwedeng magpautang or ito lang yung amount na pwedeng bayaran up to 3 months. Okay? So, o kaya 3 months lang dapat bayad na yung mga receivables natin. O kaya, bayad ka agad-agad. Cash on delivery ka agad. Paano kung libo-libo na yung binili? That's why when you look at Lazada, yung Lazada, previously, cash on delivery, tsaka credit card lang yung meron sila. Ngayon, they also have installments. Okay? Because they want na more people will stay with them. The longest duration of credit that they can give is only up to 6 months. Okay? And then that is not even 0% credit. So in this way, the factor BDO is also earning from Lazada purchases. But nonetheless, I mean, they have tighter credit control. Matagal is they do cash on delivery or cash on pickup. So that's 15 days maybe, depende sa bilis ng delivery ng delivery partner nila. But you have 15 days to pay. Minsan may mga clients na nababansagang bogus buyer kasi dineliver na yung product sa kanila tapos wala pala doon or hindi kayang magbayad. So yun, sayang yung ano. So if you cannot pay for that item cannot be sold to you. Now, because of that, the disadvantage will be loss of sales. So back to Lazada yung item, or you lost customer goodwill. Now next, reduction of inventory levels. How can you raise money? Okay, of course, you have to benta. You have to make benta. Kahit mangutang ka pa or what sa mga bangko. If you don't sell, there is no point to your business. Maintaining high levels of inventory is not good for your business. Okay? So dapat laging ayaw din naman nating out of stock lagi. But you have to maintain a certain amount na such that pag clinic ng customer yung item mo, meron kang maibebenta. Hindi pwedeng, sorry, out of stock na pala. Or worse, obsolete na yung inventory mo or slow moving. Okay? So the best way is to reduce inventory levels. So this, okay? Tignan mo yung Lazada, what did they do to get back into business after the community quarantine was lifted? They have instituted bounce back sale. Actually, lagi naman silang may sale. Yung last 6/6, pero 6/6, June 6 sale. what they do is they rename the sale bounce back sale. Okay? Para lang umusad yung inventory nila. Mabawasan pa yung ano nila. So, wala naman silang buy one, take one, but they have reduced the prices. Okay? Or kung hindi man reduce yung prices, they have reduced the delivery charges. So, let's say they gave out 50 pesos na discount for finance, for shipping discount. So, yon. So, para lang maengganyo yung mga tao na bumili. Okay? So, that is a way to reduce inventory levels. So, paano kung slow-moving or obsolete yung inventory mo? Ito, patay na. Problem. Inventory is still Samsung S5, S6. Sorry, wala na talaga. Okay? So, it may not be liquidated at all. Supply ka nga, hindi naman siya pabor sa mga pinagbebentahan mo, then you lost customers. Okay? You lost sales and you lost customers. So, yun yung worst doon. Ito naman is, you are naman, nagiging sutil ka naman sa mga supplier mo. So, delaying payment to trade payables. So, by providing a period of credit, suppliers an effect of offering a business an interest-free loan. For example, you are a karinderya, you own a karinderya, or you own an eating business. Ang supplier, on his side, he will supply you 50 trays of eggs per week. You naman will pay every 20th of the month. Now, let's say, hindi mo tinutupad yung 20th of the month. Okay? Let's say, meron ka lang dahilan sa supplier mo. Ay, boss, sorry. Sa Lunes na lang kasi walang bangko. O kaya, basta meron kang alibay lagi. Ay, hindi pa kasi pumasok yung payment nung nagkakasera sa akin. Okay? So, pwede bang after 5 days or pwede bang after 10 days? That can work for you for a short term. Okay? And that can be a source of financing. Hindi siya source of financing na but it can be na yung pera na meron ka, hindi naman talaga yun sa'yo. Kasi nga, pambabayad mo sana yun sa supplier mo, di ba? Pero yung pera na yun na meron ka, you could have used it to buy other things. Ay, wala na pala akong mantika. So, I'll buy mantika muna. So, i-delay ko lang yung payment ko ng 5 days hanggang makarecover. Okay? So, 5 days na nabenta, yun na yung papambayad ko sa supplier ko ng itlog. Okay? Now, that has freed up some cash for you. Pero yung cash na yun, ibabayad mo pa rin. Diba? But, ang disadvantage naman yon kung lagi-lagi mong ginagawa, lagi-lagi kang may dahilan, lagi kang late magbayad. Okay? Pag naningil na sa'yo, wala kang pambayad, then you are gaining the reputation of being a slow payer. So, hindi siya maganda. Lalo na kung meron kayong written supply agreement with your supplier. Okay? So, kung ganito yung bayaran, di ganyan yung bayaran. Kung ganito yung dineliver niya, kung wala namang problema sa delivery niya, then, okay, you pay as agreed. Okay? During the time na pinag-usapan ninyo. Okay? So, that is delaying payment to trade payables. Okay? So, don't do that often, but that can be done, but don't do that often. Now, with that, so I hope that the objectives of this discussion is already achieved. So we were able to compare and contrast the sources of revenue of an institution. So again, we have external and internal sources, and it really depends on your whether it's a long-term or short-term. Now, at this point, we will be using as an example or as an application the financial statements of a publicly listed company in the educational sector. And you have to identify the sources of financing for this company. So here we have, I have shown here the financial statements of Centro Escolar University. So from this point onward, you will be discussing with a classmate, okay, the following questions. So there are 5 questions. So I have already indicated what pages you are going to look into. So should it be very, very complicated for you, so just refer to pages 50 to 51 and 64 to 68 of the financial statements of Centro Escolar University and answer these 5 questions. So do you think, first question, does the CEU Central Escolar University have the three business activities of operating, financing, and investing activities. So what are their share capital distribution? So how much? How much? Okay, so you can look at it from the statement balance sheet. Okay, so share capital distribution from the how much is owned by shareholders. Okay, how different is it from last year? Did it increase? Did it decrease? Okay, what are its liabilities? Okay, so how much are its current liabilities? How much are its non-current liabilities? How different is the liabilities from the share capital distribution? If their liabilities increased, for what did they do it? Was there an increase in the equipment that they have, in the assets that they have? Okay, so do you think it was the liabilities that they incurred in 2019, the additional liabilities that they have incurred in 2019, do you think that these were invested in non-current assets, I should say? Okay, so do you think these were invested in equipment, assets, okay, or PPE, property, plant, and equipment? And then, as to dividends or earnings, does it issue dividends? Okay, does it issue dividend as part of its earnings? So what part is retained? What part is issued as dividends? Okay, or did it earn? Did it earn at all? And next is, who is CEU's financial manager? Did he or she do a good job in 2019 in looking out for the best interest of CEU's shareholders? So justify your answer. So you will not answer all of the 5 questions, just answer three of these main bullet points for the questions. And then you have to submit the answers in a PDF. Okay. So individually, so your answers will be individual. Okay, but the discussion can be done by pairs. Okay. So with that, thank you very much for listening to my presentation. And all of these, as I mentioned, I have 3 references from Peter Attrill, Ken McElroy, and these financial statements by Central Escolar University. However, how I have framed this discussion or even interpreted their definitions and their categorizations is all up to me. So thank you very much for listening. That is all. Thank you.